Have you ever pulled your credit score on one of those credit score websites, gone to the bank and applied for a loan and gotten a credit score there too? Are the scores the same from the bank and the website? This video covers credit score basics. My name is Dave. I'm with the Bolduc Realty Group and I'm a Connecticut real estate broker. I believe it's very important that you understand your credit score and things you can do to manage your credit score. I highly recommend that you talk to a lender or a reputable credit repair person if you have issues with your credit score right now. There are a lot of scammers out there and they can cause a lot of damage. Anyone who is telling you that you can ignore or not have to pay debt and not have any repercussions is not telling you the whole story. Your credit score can have a huge impact on your life. Do you know how it's calculated? Do you know that there are multiple different credit scores out there and they were not all created equal? In my line of work, I talk to a lot of people with not so good credit scores. Some don't know until they try to get a loan. Others do know, but they just don't know how to fix it. I'm going to go over the 5 components of a credit score and try to give you some ideas on how you can manage it successfully and avoid some of the pitfalls that can cause you problems. The 5 components of the credit score are past delinquencies, your debt ratio, the average age of your credit file, your mix of credit, and inquiries. Some of those components of the credit score are more important than others. So let's talk about what a credit score is, what impacts your credit score, and how you can successfully manage it. The first thing, a credit score is an attempt to estimate the chances of you as a consumer going 90 days or more past due on a debt. That's all it is. Credit scores are calculated once a month, and the calculation is done on the data that's in your credit file at that time. Pepperidge Farm remembers, but your credit score does not. It doesn't remember things that have been removed from your credit file, and it doesn't remember balances that have been paid down. Remember that. We're going to talk about that in a minute. Unfortunately, there are some changes that are coming down the road in a year to 2 years, I think, that are going to look at the balances over a longer period of time. From what I understand, they're going to look at a 24-month running average of the balance. So that's going to have a big impact on everyone's credit scores. There are many versions of credit scores. Each is calculated a little bit differently and scores can vary. You've probably seen that if you've gone to one of those credit score websites and you've also gone to the bank and had your score pulled, you'll find they're different. FICO Classic is the gold standard that's been used by lenders since about 2000. It's based on 7 years of history. Scores range from 300 to 850. And each credit bureau calculates it a little bit differently, Equifax, Experian, and TransUnion. So those see slight differences. The only way to get the true FICO Classic is to go to www.myfico.com. I think it's 20 or 30 bucks, and you can get a copy of it. The website's right there. Credit scores other than FICO Classic that you can see on websites, things like that, they're fine for tracking and trending your score, especially if you're doing some credit repair. Is your scores going up? Are they coming back down? What's going on? That's valuable. But only FICO Classic is the one that the lenders are going to use when you're going for a loan. The first component of your credit score that we're going to talk about is past delinquencies, late payments. Past delinquencies carry a 35% of your credit score. So they're a big stick. They're the biggest impact to your credit score. Late payments can crush your credit score. Late is defined as 30 days past the due date. So if you have a payment due July 1st, on July 31st, you're 30 days past due, it's going to hit your credit score. It can hit your score by as much as 100 points. If you have multiple late payments, each one of those late payments is going to impact your credit score. Late payments stay on your credit report for 7 years. Older late payments have less impact than more recent late payments, so keep that in mind. Bankruptcies also hit your credit report. Chapter 7 and 11 are for 10 years, Chapter 13 for 7 years. If you have collections, they stay on your report for 7 years. And charge-offs, which are a debt that the creditor has determined they're never going to collect, those stay on your record for 7 years, and they can also have tax implications, so be aware of that. The second component of your credit score we're going to talk about is the debt ratio. Debt ratio is 30% of your credit score, so it's still a big hitter. Simple example of what debt ratio is. If you have one credit card, the debt limit or the credit limit on that credit card is $100. If you spent $10 on that credit card, your debt ratio is 10 over 100 or 10%. If you then go spend some more money and you now owe $75, your debt ratio is now 75 over 100 or 75%. Lower is better on the debt ratio. Is there an ideal debt ratio? Yeah, 0. If you have 0 debt, then there's 0% chance that you are going to be past due on a payment. And remember what a credit score is trying to estimate. It's trying to estimate the probability that you as a consumer are going to go 90 days or more past due on a payment. So if you don't have a payment to make, then there's no way that you're going past due. The third component of your credit score is the average age of your credit file. It's 15% of your score. The longer your average age, the better. Average age of your credit file is calculated using both open accounts and closed accounts. So a couple of hacks here. The first one, don't close an account ever if you can avoid it. If you open an account and close it 1 month later, forever, that one account is going to have an average age of 1 month, and it's going to drag down your average age of your credit file. The second thing, and this is to help others, if you've got a credit account, say a credit card that you've had for a long time and it's got a good history, you can add someone as an authorized user. They'll get the benefit of the debt limit on it and also the age of the file, so that'll help their credit. Don't do this if you have bad credit or an issue with the card. The fourth component of your credit score is a mix of credit. This is 10% of your score, and it's a measure of the types of credit that you have on your credit file. There is an ideal mix. It's a mortgage, a home equity line, 3 to 5 credit cards, a student loan, and a car loan. You do not need to have this exact mix to get the best score. It is way more important to pay on time and to manage your debt ratio to keep it low. A good way to build some credit is to use a type of credit called a secured credit card. You pay the bank some money, and then that becomes your credit limit. You can spend against that credit limit until it's gone, and then every month you pay it back, and then the bank reports on your payment schedule. As long as you're on time, it's going to build credit and it's going to help you in the long run. The fifth component of your credit score is inquiries. This is 10% of your score. They affect your score for 1 year and stay on your report for 2 years. A lot of people that I've talked to get really nervous about getting their credit pulled because they're afraid the inquiries are going to destroy their credit score. While it does impact your credit score, if you're looking for a mortgage or a car loan and you're shopping around, the way it's set up, any inquiries within a 30-day period count as one inquiry. That way you can shop around, get the best rate, and it doesn't destroy your credit score. Inquiries that do not impact your credit score, they include personal inquiries. If you go and ask for your own credit score, it doesn't impact it. Job-related inquiries, and then also insurance or account review inquiries do not impact your credit score. You can get a free copy of your credit report covering the last 7 years of history at www.annualcreditreport.com. It's updated monthly, and like I said, it covers the last 7 years of history. Unfortunately, it does not come with the score. You have to go to myfico.com and pay the $20 or $30 to actually see the score. That's it for the Credit Score Basics video. I hope you got some value from it. If you are in need of credit repair, if you have some issues with your credit report, please be very careful. There are a lot of scammers out there. They've got very official sounding names and a really slick pitch, and they will destroy your credit in a minute. I highly recommend you talk to a lender or a reputable credit repair company, or maybe 2 or 3 of them to cross-check the advice and make sure it's good before you do anything. These scammers can destroy your credit very quickly, so please be very careful. I'm Dave with the Bolduc Realty Group. Have a great day.